Today we are going to check some bloody history of Bitcoin. I mean the dump history of Bitcoin, to be honest. From the moment Bitcoin invented, its value always going up because we started from below $1 and now we are at $36,000. But sure, there is some tips. Let's analyze why that big dumps happens. This video is going to be a little bit longer than usual, so sit back and learn from what we came through in our crypto past. It may help us in the future. Otherwise you can call yourself an investor or a trader. Let's get started from 2017 massive dump. This was the biggest dump in Bitcoin history. The price was at $19,798 on 17th December 2017. From that point Bitcoin entered a bear market almost for a year. As you can see, the price came back to $3,156 on 15th December 2018. That was an enormous dump, around 84% if its value gone from its peak price in 2017. There was too many reasons for that dump. Let's talk about that reasons for a while. Reason number one, May. It was the end of the year. It might seem comical when you first hear it, but with major holidays like Christmas, Hanukkah, Kwanzaa, and New Year's planted right in the same month stretch, the end of the year is a notoriously bad time for savings accounts and investments, as many seek to withdraw yearly gains. The second reason could be altcoin overloading. I'll explain that. Following the initial surge in Bitcoin, most of the major gains we've seen in cryptocurrency this month have been in altcoins like Cardano, Xtom, Ripple, Tron, and Verge. This has undoubtedly felt amazing to the investors motivated to leave the safe haven of Coinbase for the further reaches of the other exchanges. One might even say too good to be true. In the process of diverting funds from BTC, enthusiastic crypto traders may have also temporarily destabilized the Bitcoin market. If Bitcoin were just another coin, that would be all well and good, but Bitcoin is the gold of the cryptocurrency world, the standard by which all other coins are measured. So whether we like it or not, every altcoin is hedged, in some way, along Bitcoin's success, or at a minimum for the foreseeable future, its maintenance. The third reason, made Bitcoin Cash confusion on Coinbase. Coinbase announced it would support buying, selling, and trading Bitcoin Cash, BCH, on its platform. Since the August fork, there has been major community infighting among the BCH and BTC camps regarding which is the true Bitcoin. Point being, energy is high around this discussion. Many have speculated that BCH would end up on Coinbase, but even conservative estimates in crypto circles were January 2018, so it's no surprise that the noticeable and seemingly out of the blue gains made in BCH in the days and hours leading up to the announcement caused some on social media to cry insider trading. This resulted in Coinbase shutting down BCH trading within minutes to launch an internal probe into the possibility that insider trading occurred. By the next afternoon, BCH was in full force again on Coinbase, but the impact might have been deeper felt than we initially realized. Many have at best a passing understanding of the differences between BTC and BCH, and seeing BTC prices drop so sharply when BCH jumped onto the scene, as well as BCH's perceived volatility, might have left a larger stain in their minds on the broader concept of cryptocurrency. And even for those who didn't pay too much attention to the hullabaloo, it might have just amounted to extra, unwanted confusion to keep them from participating further. These may be the key reason for Bitcoin crash in 2017. The second crash was happened in 26 June 2019. The price was at $13,970. It crashed into $3,782. That was around 70% drop in very few weeks. There is still some reasons for that. Rather than S pullback, let's analyze that too. That was arbitrage trading. Let me explain that too. The recent rise was not a rise at all, but in fact a fall. In other words, the value of Tether, controversial cryptocurrency with tokens, dropped. So in order for altcoins to keep their value up, they needed to rise against Tether. When Bitcoin rises, assuming Tether is worth $1, altcoins seemingly rise up, but not because they keep their value. In fact, they fall in value against United States dollars and BTC. But because this fall is not equal to Bitcoin price rise, the final result is a rise. For example, if Bitcoin is $1,000 and some altcoin is worth 0.1 BTC, and then Bitcoin goes up to $2,000, that altcoin, if it remains 0.1 BTC, will rise to $200, which is impossible for that coin to happen because there is nobody buying it. What happens is that the rise of Bitcoin from $1,000 to $1,000 plus will start creating arbitrage opportunity in alt BTC and alt United States dollar, and as traders arbitrage this, the final value of that coin will go somewhere between $100 and $200 and closer to lower bound. So the final result will be an altcoin worth around 0.06 BTC, which is a big fall, but thanks to arbitrage traders the value of it rose a little to $120 in a fake manner. The third dump is happening. We don't know that the dump is over or not. Somehow this dump may be sponsored by Elon Musk. Let me explain that too. Tesla, the electric car manufacturers, announced that they are going to accept Bitcoin for their electric cars. That was a really bullish news from the day they announced that. The price was skyrocketed into its all-time high of $64,000, and some drama happened in Tesla, and the Elon Musk Musk was the villain. He announces that they are going to terminating Bitcoin payment system temporarily. The price started to dump, and now we are back to where we are at the starting of the drama, $36,000. Elon said that they are terminating Bitcoin payment because of the carbon footprint that leaving by Bitcoin miners. Anyways, in long run I'm still bullish on Bitcoin. That's enough for today. Don't forget to subscribe and like this channel. If you need any specific coin for technical analysis, just comment it down. See you later. Disclaimer: all of our videos are strictly personal opinions. Please make sure to do your own research. Never take one person's opinion for financial guidance. There are multiple strategies and not all strategies fit all people. Our videos are not financial advice.